Welcome to another episode of What Now? My name is Gary Fickard, known to many as the FX Big Dog, and this is your weekly guide to navigating the Forex markets. In today's video, we're going to zero in on three currency pairs: the Euro New Zealand dollar, the US dollar CAD, and the CAD Swiss. Now, we're going to start off by discussing where it's heading, then we're going to explore how to spot reversal signs, and that is the critical skill for staying ahead of the market changes. Lastly, we'll talk about what we need to watch out for in the next 24 hours to make informed trading decisions. Now, if you find this content helpful, make sure that you subscribe to the channel and hit the notification bell so that you don't miss out on any updates. We've got plenty more valuable insight and strategies coming your way, so stay tuned and stay ahead of the markets. Let's go ahead and dive right into it. All right, traders. Well, we had a lot of things happening over the last week. In fact, it started off on Saturday. We all know that there was an attempt on former President Trump's former President Trump at the rally, and the markets opened up on Sunday, not really that wild. But then, in the meantime, we have had a lot of things come off the out in the news based on some market data. And this is going to affect obviously the currency pairs that we're going to be talking about today, which is US dollar, Canadian dollar, euro, and the New Zealand dollar. And let's go ahead and talk about the data. So if we look at the data this week, we had on the Monday, we started with the Empire State Manufacturing Index. That showed lower than what they were expecting. They actually expected a bit of an improvement on that. Now, you would think that that would cause a bit of a weaker move on the dollar, which it did not. Now, if we go ahead and take a look at the Feds came out on Monday as well, and there was a hint that there's a possibility that rate cuts could come as soon as September. I don't know. We'll have to wait and see what the CPI numbers are reporting before we can make a decision on that. Then we got on Tuesday, we got CPI numbers coming out for the Canadians. And if you look at the Canadian CPI numbers, it showed a little bit positive, meaning that there could be a possible rate hold rather than rate cuts, because they cannot cut interest rates if the inflation numbers continue to rise. So that is obviously sort of a thought that possibly seen some bullish movement in the Canadian dollar. Now, if we go look at the CAD Swiss setup, that we're going to take a look at that chart, we can see that the CAD Swiss actually dipped over the last, call it 12 hours. And we're going to dive into exactly what that means as well. And then as we go into the New Zealand dollar CPI numbers, you can also see that CPI numbers came out for the New Zealand dollar last night, and that came out at 0.4%, which is a lot lower, or at least lower than what they expected. They expected it to be at 0.5%. Now, with that being the case, you would think that you would see a much weaker New Zealand dollar, but it's not quite as weak as what we thought. So again, if the CPI numbers come out lower, they're expecting rate cuts, and the rate cuts causes a weaker move to the currency. And we're not quite seeing we saw a little bit of weakness, but not as drastic as what we anticipated. Again, we're going to look at the technicals and see exactly how the market's setting up based on that. And then that doesn't end off the week, right? The week we have, we can see right here, we got some European data coming out tomorrow, which means that we have the rate decision. They're keeping the rates unchanged at 4.25%. Let's see if that's actually going to be the case. And if so, what are they going to say in the statement? Because if it comes out at 4.25, the market's pretty much already discounted that in. But then the question here is, what is said in the statement? Is there any hint of possible cuts? Is there a hint of maybe keeping rates unchanged? Are they going to talk about no cuts at all this year? That's all that's going to come down tomorrow. And around about the decision is going to be at 8:30. Sorry, actually 8:15 tomorrow morning, which is pretty weird. It normally comes out about 7:45. It looks like it's 8:15. That date has changed. So again, traders, a lot of information coming across the board that we got to go ahead and pay attention to. But the question here is that I always say, what is the actual technicals doing? And what is it telling us? What stories are it telling us? And those are the things that we have to go ahead and dive into. So without further ado, let's go ahead and dive into the actual technicals this morning. And let's go ahead and see what the market's doing. We're going to start off with the Euro New Zealand dollar. All right. And I'm looking at this particularly because we have a beautiful structure that's been formed, a beautiful model. And we can see here that we started with accumulation. We saw manipulation to the downside that kept us to the sell side of the curve. And then price started moving up into the buy side of the curve, which means we started seeing an upward trend. And the target, the draw of liquidity is up here, still to be hit at around about 81.16. Now, price has come a little shy of that, and you can see right here, we see a fair value gap that's acting as a key level of resistance at the moment right now. Market has gone ahead and fulfilled that insufficiency. So we've seen a bit of a balance in inefficiency in that area. And so this is the question here, all right? The question is, do we see now the market sell off, and where is it going to sell off to? And yes, we are expecting a little bit of a sell off, and we did see quite a bit of move down south here with the news out in the New Zealand rate decision. And again, traders, with that bearish move right here, this is indicating a stronger New Zealand dollar rather than the weak one. So we did see that pullback. Now, are we going to continue to see the market move back down south again? Well, remember, traders, what goes up must come down. And so, yes, the answer to that is we are going to see price moving back down south. That's what we're anticipating before we take out that liquidity. That's got to happen. And so where can price move to? We can see price moving back to the bottom of the range here around about 78.49. Now, that's not only where it can go to. It can go down a little bit deeper. And how do we know that? Well, if you actually take a look at the chart right here, you can see that we actually have another fair value gap. We've got a fair value gap sitting over here, right? There it is there. There's a fair value gap sitting over here, so we know price is going to come back. It's already tested. Look at that. We've already tested a little bit of that, but we can see price continue to move down towards this level. And if it trades through that fair value gap right here, there's the fair value gap sitting over here. If it trades through that, we have another fair value gap sitting over here and here. All right. And so price may come back down into this area. And that should bring us to perhaps discount, which is a zone where you can start seeing some buyers coming to the market. And then start seeing price moving back up north again. Now, traders, if that happens, we're still on the buy side of the curve. It doesn't mean that we're getting into a sell-off on this thing. It's just a short-term correction. Yes, selling on this pair would be considered to be a short-term trend to the downside, but it is only a correction based on this larger time frame. And that's what we're going to go ahead and look out for. So what could we expect over the next 24 hours? Well, this is what I'll be looking for. I'll be looking for reversal signs here on the top and see if price shows a change in market structure. And then what I'll be looking for is opportunity to sell it down towards that support level. If you go to the 1 hour time frame, do we see that already happening? Yes, we do. We can see our price created this nice little high right here after it took out that high. So we saw break of structure. Then we saw the market come back down. We saw a sweep of the lows. We saw good displacement right here. Perfect market structure shift. And then we saw price coming back up here to fill this. Look at this. We've got insufficiency right here, sitting up over here. Price comes in there. It also tests the daily fair value gap resistance. And so we should be seeing price working its way back down towards that range low. All right, traders. Well, that's pretty much what we're expecting over the next 24 hours, heading into the weekend remember, it's Thursday, Friday. So it's actually 48 hours rather than 24 hours. But that's what we're expecting over the next 48 hours. I should correct myself and say 48 hours, not 24, because we've got Thursday and Friday of trading. All right, now let's go take a look at the Canadian Swiss. And I know a lot of traders are watching this, and there's a lot of concern. Well, traders, you got to go ahead and look at everything in context, right? And start understanding what's going on. First, number one, traders, we are in this large range, and we did see price consolidating here. Price then moved outside the range, which means that we're moving into the sell side of the curve. We definitely saw manipulation and a reversal here, and prices moved back to the buy side of the curve. Now, take a look right here. This is a buy side of the curve. We're still in the buy side of the curve based on this larger picture. But what's happened is we have seen here that price went ahead and accumulated here. We saw the market move to the sell side of the curve again. We saw price going up, testing the top here, coming back down. We're still on the buy side now. All right. We're on the buy side, not only on the large picture, but also in the short-term picture as well, unless price takes out that low. And so as I zoom in a little bit here, so you can see what's going on, all right, this low is critical. If we take out that low, then sure, we could start seeing price maybe displacing below, maybe manipulation. Maybe the market's going to take out some draw of liquidities down to the downside before starting to move back up again. I don't think we're going to get that. I think that this move right here, we're going to see over the next few days, price starting to work its way back up again. What's key is that we take out the high here at 65.39. Is this a comfortable move that we like to see? No. But is it something that is probably due? Yes, it is. We had a daily fair value gap sitting over here. Price has gone ahead. Take a look right here. Price has gone ahead and closed up that insufficiency. So we've seen a balance of insufficiency. So we've seen how the market come back to balance this setup, and therefore we are now going to expect price to probably go ahead and hold here. Now, are we going to see a big candle move to the upside? Maybe not. But what we can see is we can see price starting to stall here. So maybe the next daily candle is going to be something like this, with a bit of a manipulation down below, not taking out the low there, but a manipulation right here, and then working its way back up. Let me take a step back here. All right. So if price comes down and tests this low, let's say we sweep the low right here. Doesn't mean we're reversing. No. It's how it sweeps the low. So this is critical right here. If the market does come down, let's say we get another candle that does something like this, sweeps the low, and then closes out something like that, back above. That's an indication that we maybe have equal lows right here. And therefore, again, we could be moving back up to the top of the range right here. This will be a draw of liquidity on this particular pair. So traders, for those that are concerned about the CAD Swiss going further down south, we're far from that right now. We cannot equate the details are telling us that we're going further down south. All right. There's a lot of things here that's still indicating that price is either in a range or price is actually needing a little bit of a retest of that fair value gap, which is on the daily time frame, before heading back up north. These are all things that the market does, and that's what it does. It balances out. Okay, we can always see balancing of the market. All right, now over the next 24 to 48 hours, I'll be looking for signs of a reversal, whether the market does continue to just rally up again, or we see some indecision candle forming right here, whether the market sweeps the low. Those are all the signs that we'll be looking for over the next 24 to 48 hours. If we get them, we're moving into a bullish week next week. All right? That's what we're going to look for on this particular pair. Let's go into the last pair, which is the US dollar CAD. All right? US dollar CAD. If you go ahead and take again a look at the bigger picture is we're in this big range. And so there is obviously concern that we've got a little room for price to go up a year before heading back down south. And so if we go closer into where the market's trading right now, we can see that we have price that's been accumulating. All right. Now, this is the first phase of this model. And so what we want to see is breakout. Now, could we see a false breakout to the upside? There's a possibility, but we've got a fair value gap sitting over here. It's a 4-hour fair value gap, and it seems to be holding resistance. We have an upward trend line that's been testing this area here for quite a while here. All right. And so with that holding, we're expecting this to hold at resistance and then drive price through this area. Now, if price is going to drive through this area once again, 3,600 is key. If we get past 3,600, look at all the liquidity right here that price needs to take out. All right. We got a lot of downside liquidity. So this is definitely going to be our draw to the downside. And so therefore, traders, even though we've moved up here, we retest that the 4-hour fair value gap, we still anticipate price to continue over the next 24 to 48 hours bearish. I know this is not great, but I want to show you something even more exciting here. Look at the 1-hour time frame right here. Remember, we work in 3 phases: accumulation, manipulation, and then distribution. All right. And so here we have accumulation. All right. Price has gone north. We've seen this as the manipulation. This means the market is moving to the buy side of the curve. All right. And now we're looking for reversal. Can we see reversal here? Yes, we can. See how the market creates a high, creates a low down here, creates a high, and then creates a low. So we've seen a market structure shift. We've seen displacement down below here. Now prices come back up to retest that fair value gap on the 4-hour. There's the resistance. We've seen price rejection. We should see price continue to work its way back down to the bottom of the range, which once again is at 3,600. Traders, I believe that this is the manipulative move, and we've now seen a change in character that means trend reversal to the downside. Let's see what happens over the next 24 hours to 48 hours. All right, 24 to 48 hours. And let's see if the market does take a move to the downside. Oh, sorry, I'm bad on that. Does take a move to the downside, and we see some good market structure. All right, we want to see some good market structure hold and continue to confirm the direction that we're trading. So traders, we've got a lot of room between now and the end of the week. But that's where we looking at the markets at the moment right now. That's where I determine the markets will be going. Let's see if it holds and we do reach our targets. With that being said, traders, have a fantastic couple of days of trading and a great weekend. And I'll see you back next time. This is FX Big Dog signing off.